All right, this will be a trade recap for what is it? Friday, the 23rd of January, 2026. Yeah. It's a fairly normalish day in the market for the most part. Trying to think if there's anything really outstanding we were contending with first thing. Not really. Opened up in a pretty good place. Action was decent. Not can't really think of anything that was super out of whack or anything like that. So it was fairly normal trading day. But yeah, let's go over something real quick. I am a student of this gentleman. This is Pat Mitchell. He is a professional day trader, though he originally was in blue collar work, and he has been in the markets for a little over a decade now. And he has built up a incredible process and knowledge base when it comes to learning how to day trade. He runs a service called Trick Trades. He has also put together inside of Trick Trades a program called Size Up, and that's what I do. And it is a structured program for learning how to day trade. You start with a small cash account and you basically build that up with your education, experience, and screen time to eventually hit different milestones and become a full-time professional day trader. So if you're interested in something like that, great person, probably one of the highest quality coaches when it comes to day trading out there. If not the highest quality. I don't personally know of any other coaches that I can stand by or say that about, and I've been around a few of them in terms of their services, and nothing even comes close to what Pat offers. So if you're looking for a high quality coach, I cannot recommend him enough. And like I said before, you can find him over at tricktrades.com. He also has a YouTube channel on his own where he posts recaps usually daily. If you want to check that out, you can get a little preview of the kind of information he offers and the quality. And that is just a very, very small amount of the knowledge he possesses. But yeah, definitely check him out. It will be worth your time and effort to go through some of his content and judge for yourself. And with that being said, let's get into the charts. Right, so yeah, fairly normal day. As you can see, we have our levels that were plotted pre-market by Pat. And the only thing that's kind of hide on here that he didn't, and it was just something I was curious about, was this yellow trend line, just to see if, again, it was valid or not. Turned out to be somewhat valid. But again, it's one of those things where that was just for my curiosity and was not part of the official trade plan he gave. So just a disclaimer there. But yeah, again, we had good levels to work with and some moving averages. Opened up in a pretty good spot. Main focus was on Qs and took a couple trades on that, both long and short. Just kind of shows you that opportunities both ways. Even if you have a bias, it's good to kind of get that bias under control. That way you're not just focusing on one side of something, because that can skew your analysis as well as kind of make you miss out on potentially half the opportunities that are out there. So definitely want to push for being unbiased. So as we were coming to the open, on both of these, we were floating between the two channels on both. The upper channel on Qs and the lower channel on SPY, and Qs was just the better risk reward ultimately from where it was opening up. So took a couple stabs at that one. First one was the short coming into that level. Pull that up. So kind of happened right out the gate. As you can see, we popped into it, then really tested it, and then it dumped out. So came up into it, started in, uh, added, but before I got the add in, it popped up a bit more and tried to capture that premium. Didn't have the best timing on that one. Still something I'm struggling with is nailing exits when things are kind of whipping around a little bit. I don't know if that's possible, but to be more consistent, because there was way more on there than when I pulled that, entered on this actual coming back up to test it. And then as it kind of really got closer, added into it to kind of correct my average more. And then as soon as it started coming down, started selling the position and getting out. Probably could have held on to this last one just a little bit longer. As you can see, left, again, a decent amount on the table there. So, yeah, kind of one of those things where something I need to be more conscious of, try to be a little bit more patient. Say that's a theme I've been noticing with myself is trades start working and then basically just ripping the entire position out. Now, if you have a smaller account, that's probably the way you want to do it. Just get out entirely, not hold anything, looking for more follow through. But to where I am, I need to start training myself basically to get that follow through or wait for the follow through and manage the position accordingly, whether it does or doesn't work out. The management, I would say, making progress there. Adding and averaging, making progress there. Interesting. So again, just too early sometimes to enter, which really skews my average when I correct, which turns a lot of, at least as of late, good trades, green trades, into basically scratch trades. So there's a pattern there that I'm picking up on and trying to diagnose and fix. And then at the same time, on the other side of that, getting out when appropriate and holding for maybe just a little bit longer, so long as obviously the price action levels and situation dictate that it's more than likely going to go in your favor. If it's not, then there's obviously no point holding on to that, because if you have locked in profit, you generally don't want to try and chew that away unless you're working a bigger picture idea, as Pat describes to us. But at the same time, it's like still in the account building phase of things. So I'm not sure. I'm not at that level yet. And with a smaller account, it's probably not the wisest decision because the risk exposure potentially. So that was the short. And then as you see here, after we had tested this and dumped out, kind of came back down, monkeyed around a little bit here and consolidated, started to come back up, dumped out again, and then came right down into this little support area that we had marked and basically fired off a trade, dumped out as we were coming in. And yeah, I actually entered right here where was actually early. I shouldn't have gotten in this early, but since I did, once you're in, you kind of work the trade. And on this green pop, took it right off. It was a small trade, not the best one, because as you can see, like, let's see here, I entered almost a point away from the level, which was not appropriate. I should have waited for the level itself. And after that point, I was like, probably need to just not take any more trades at that point, because 2 trades, both were green. Second trade, that's messy. Like that's not appropriate. So that's definitely a critique I need to take to heart and adjust for, because that shows right there one of my issues, and that is entering too early. Visually, again, like it looks fine, like distance wise, just video, but when you actually line up the price points, what's that 619.40s, and the actual levels down here at 619 or 618.50. And on cues, the way cues can move, it's you need to wait and get way closer before executing that. So while it's a green trade, that is a bad trade in my book. And I'm confident Pat would agree with me that that is a bad trade. Because if you wait, again, you do it. Here's a good example of doing things right. So you waited for the level, it comes down into the level, you execute there, reacts, you pay yourself on that first reaction, you get the confirmation to add back in. Boom, again, follow through, beautiful follow through. I mean, that's a lot of range right there, and if that was the only trade you took in a day, like that would have been a beautiful trade. And on the other side of it, you can do what I did. Turn, basically enter early, way too early, and get rewarded for doing things wrong. And just because you make money in a trade doesn't mean you did it right. And that's something that people kind of don't take into account. It's like, hey, I took a trade, it worked, paid, and sometimes you get like home runs off of that stuff, and it just skews your judgment completely because you think you did it right because you made a shit ton of money, but in reality, it's like, nah, like that was a horrible trade. It was more of a gamble. You had no plan whatsoever. It just happened to work out for you. Yeah. So take my licks for this one. Definitely pull this one aside, and with a couple of the other ones that I keep and look at it and be like, again, basically hound myself to stop doing this, undo that habit, and do it appropriately. Which is something, again, we can all probably learn from, is do it right. And do it right repetitively. That way, again, every good repetition is what we're looking for. Every bad repetition, that's something you got to undo. And having done that in the past, yeah, you're going to have to sort that out. But yeah, other than that, decent week. And here's to going into the weekend and enjoying it, kind of resetting and getting back to it afterwards. So hope everyone has a good weekend themselves, and catch everyone on Monday. Have a good one.